Did you know there are several different types of banking institutions you can put your money in? While you may associate banking with just savings and checking accounts, there are various types of banks with specialized offerings, varying interest rates, and different perks for account holders. In this video, we're going to take a look at the major differences of the most common banking types and what it means for you, the consumer. But before we go any further, make sure to support our channel by hitting the like button, subscribe to our channel, and make sure to click the bell icon to be notified for all of our new videos. Now let's get into the different kinds of banks, the services they offer, their pros and cons, and how each can benefit you. The rundown. What are the different types of banks? You might be thinking, a bank is just a bank, right? A place to store your money. Not quite. You see, different banks offer different products and services. While the many services are similar, there are a few important differences. Here's a quick rundown of the different bank types. Number 1. Retail banks. Retail banks are the ones most people are familiar with. Banks are for-profit institutions that are privately owned by investors, offering credit cards, savings and checking accounts, as well as loans. Retail banks and their branches are widespread and available to the general public. Number 2. Credit unions. Credit unions offer many of the same services as retail banks, but on a smaller scale. Unlike retail banks, credit unions are nonprofit institutions that are owned by members and require membership to access their services. Compared to banks, credit union membership is usually based on shared characteristics such as being in the same occupation or organization. Number 3. Online banks. A more recent addition to the banking world are online banks. Having no brick-and-mortar locations, online banks offer traditional retail services completely online. Operating without branches, online banks give consumers the option to conduct their banking entirely through websites and apps. Before we explore the pros and cons of different banks for consumers, it is important to note that there are still other kinds of banks that cater to businesses rather than most individuals. These include private banks. Private banks typically offer services for wealthy individuals with high or ultra-high net worths. Clients of these banks are assigned a representative that will help them manage their wealth with a variety of services. These banks offer similar services as private banks such as savings and checking accounts, but with higher limits. Now that you know the different types of banks, let's get into how that translates into real-world benefits or downsides for the average consumer. Commercial banks. Geared toward businesses, commercial banks are similar to retail bank accounts in that they offer lines of credit and checking accounts. The major difference is that commercial banks specialize in handling complex, large transactions and customize their services to fit cash flow needs of their commercial clients. Investment banks. Similar to commercial banks, investment banks serve businesses rather than individual consumers. However, these banks handle large amounts of money and serve larger institutions. This type of banking primarily concerns mergers and acquisitions, as well as selling or buying stocks and bonds. What are the benefits and downsides of using different banks? When choosing from the 3 most common types of banking for the average consumer, it is important to take a look at the pros and cons. To illustrate this, let's compare retail banks, credit unions, and online banks. Retail banks. Pros. Access to large number of local branches and ATMs. Retail banks tend to have hundreds if not thousands of locations, as well as nationwide ATM networks. In-person support. For clients that need frequent in-person support or services like safety deposit boxes, retail banks offer more convenience. Retail banks' cons. Lower interest rates and higher fees. Compared to online banks, retail banks tend to offer lower interest rates and charge monthly to checking accounts. Credit union pros. Personalized service. Credit unions are known for excellent customer service, with many offering free financial education as part of membership. Low interest rate loans. One of the strong points of credit unions is the lower interest rates members pay for car and mortgage loans. Credit union cons. Limited offerings. Because credit unions are smaller and have membership requirements, the product offerings for investments are often limited compared to banks. Online bank pros. Accessibility. Online banks typically offer intuitive websites and apps for consumers to handle all of their banking completely online. Higher interest rates and lower fees. Online banks can afford to offer higher interest rates with less or even zero fees since they don't have to pay for physical locations. Online bank cons: lack of in-person support. Since their services are entirely online, customers will have to utilize phone, chat, email, or forum avenues of support. What type of banking is right for you? The bank you choose to go with is ultimately based on what you are looking for out of your banking experience. Looking for personalized service or in a specific industry? A credit union may be the best choice for you. If convenience and lower fees are motivators, try online banking and the ease of banking through intuitive sites and apps. For those looking for product offerings and access to physical locations, the traditional retail banking experience is a great choice. We hope you found this video useful as well as entertaining, and that you'll smash that like button, subscribe to our channel, and turn on all notifications so you never miss an update or a show. Thanks, guys.